Hello, chart watchers, and welcome to this Monday, August 27th Market Watchers live show with your host, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, the market picking up where it left off last week, setting some more records. We got the Dow Jones Industrial Average currently up 264 points, now back up above 26,000. The S&P 500 broke into record territory, closing at 2874 on Friday, and we are up another 23 points today to almost 2,900, 2897. And we got the NASDAQ up another 78 points, first trip above 8,000. Pretty big news there on the NASDAQ. Russell 2000 also up 10 points, continuing to move into record territory. 10-year Treasury yield moving back up, holding that support level that we talked about last week. We are back up more than 2 basis points today, 2.85%. Volatility, a little surprise. We're seeing push to the upside in the volatility index, not significant, but given the huge gains in the market, that is a little surprising. Financials continuing to perform well. We are now seeing another breakout today on the XLF. If this holds into the close, would be bullish for that group. Materials, look at the huge move on materials, taking out this triple, quadruple top back at the end of July, early August. Life insurance getting back into that financial space. Life insurance doing very well, trying to take out a triple top. Banks trying to take out a double top. Goldman Sachs in the investment services group. Actually, investment services are outperforming both life insurance and the banks, but I didn't think their chart was quite as compelling from a technical perspective. But nonetheless, you do see a breakout here on Goldman Sachs. A little bit of an inverse head and shoulder. Move up, left shoulder, neckline, inverse head, right side of the neckline, inverse right shoulder, and a breakout. Very bullish action in Goldman Sachs, not only on an absolute basis, but also the beginning to show some relative strength. And then finally, semiconductors, been in kind of a wide range for the past couple of months, with lows down around this 3350 area and tops just above 3550. 5 days ago, we were threatening that breakdown on the lower side. Now we're moving back up and trying to get back through that resistance area on the semis. Okay, Erin, it's another week, started last week of August here. Can't believe another month almost gone by, but how are you doing today?
I am doing quite well, and sounds like you're doing pretty well on the East Coast for sure. Nice, and I don't know, you have this energy level to you today. I don't know. Is it the market?
Well, market's in record territory. That normally will do it.
Yeah, I was going to say, it must be a couple short-term investments going your way for sure.
Well, when I call the market wrong, I'd rather be wrong and have the market going up than be wrong and have the market going down. Mm-hmm. Because end of last week, I really thought the market short-term was toppy. I mean, I'm very bullish. I'm going to go over some charts and explain why in just a few minutes. But short term, I thought we might, we were just seeing some potentially topping candles in some key areas. So I thought maybe the market was going to pull back with September around the corner, but the market has a mind of its own, and it's showing it today.
Yes, indeed. Well, it's going to be a great day. I can already tell. Lots of Monday setups, and let's go ahead and go over what's coming up this week, though. We will be hearing your seasonality report tomorrow, so we can get an expectation for September. My father, Carl, will be in on Wednesday. And then on Thursday and Friday, I have Julius de Kempener guest hosting while you are away. And finally, on Monday, Labor Day, no Market Watchers Live. And then, of course, next week, I'll be starting off the week like I will be today with a DecisionPoint review. All right. What's on the agenda, though? First off will be Monday setups after our technical news. Earnings spotlight today. I know you had some stocks you wanted to talk about, Tom, that looked interesting. 10 and 10 to 1. Our first symbol will be Corning, GLW. And then finally, I will finish it off with the DecisionPoint report, give you an idea of what happened last week and what to expect this week. So take it away, Tom. Let's go ahead and get into those technical headlines and news.
All right. Well, first 10-year Treasury yield, as I mentioned, is moving up a little bit today, up a couple basis points. And this was the bottom that we talked about late last week. We got down to about 2.81, 2.82%, which was the low that was marked back on July 6th. You can see the big rally from about 281 up to a little over 3%. Pulled right back down, hit that support level, and now it looks like we're starting to bounce again. It's good news for equities because anytime the 10-year Treasury yield's rising, that means that money is coming out of treasuries. The yield and the treasury price moves inversely at all times. So anytime you see the yield start to move up, it means money's coming out of the Treasury market. And that can be used to fuel an advance in the stock market. And of course, we're breaking out there. So this is a pretty positive development. If we get back through the 20-day moving average on the TNX, I think that would bode well for U.S. equities as we move forward. Even though historically it's a bad month coming up, I always kind of put that on the back burner and look at what's going on technically in the market. And it's always nice to see the market breaking out, especially across many different areas of the market. I know we're still waiting on the Dow. We did see a crossover 26,000 earlier, but haven't broken out to the all-time highs there yet. But that's about the only, that is the only major index that has not made that breakout. I want to move back and talk a little bit about, we're going all the way back. This is a chart of the S&P 500, a weekly chart from 1995 to 2007, the end of 2007. And the first thing I want you to focus on is in October, early October of 2007, the S&P 500 was at an all-time high, just like it is today, setting an all-time high. But that was right before a bear market. But I want to point out some things that just looked different to me back then. So let's first, I'm going to switch over to a daily chart. And I'm just going to look at the year 2007. So I'll just switch this 2007 to the end of 2007. And so there's the S&P 500. Here was that October high that we just looked at on the weekly chart. So just kind of rewind and just picture yourself the second week of October, CNBC, everything talking about, okay, we're at an all-time high. Market looks great. The S&P 500, this is just, all the cheerleading taking place. Now let's take a look at some of the things that were going on back then. So first, let's go through the aggressive ETFs. So let's start with the XLK. XLK didn't look bad, by the way. XLK broke out about the time the S&P did. We went up one more time, put in a bearish engulfing candle, and we did have a negative divergence. So even the strongest area of the market, technology, was beginning to show at least some short-term warning signs. Then let's keep moving. Let's take a look at the XLY. You're going to see a completely different picture when we look at consumer discretionary. Here is consumer discretionary putting in a triple top with a final high in July. Look at that false breakout. By the time the market put in its final high, the S&P in October of 2007, we were nowhere close. We were already down probably about 6% on the XLY from where we were previously. The XLI did make the breakout, but it also put in a reversing candle. The PPO wasn't bad, though, back then. The XLI actually was not looking too bad. Let's take a look at the XLF, financials. Financials, of course, the bear market was a big problem with the financials. Our financial system was on the verge of collapse about a year later. But here you can see financials nowhere near making that higher high. So you got the S&P breaking out, but two of the four key areas of the market, both consumer discretionary and financials, not doing very well at that time. Furthermore, some of the things, if you really believe the economy was going to be strong and the market looks ahead, so we should be seeing strength in some key areas. Let's take a look at transports back then, 2007. Here was the October high on the S&P. Transports did not confirm that move to the upside. How about we go within the transports? Probably my favorite area is railroads. Railroads really should be based on what's going to happen in the domestic, local, well, not local, but domestic economy, the U.S. economy. Railroads don't ship across water into foreign areas, so it's really just North America. And you can see the railroads did not pierce back through that July high. Then we take a look at the truckers. Truckers, kind of the same deal as railroads. Look at the truckers. Their high was back in April and rolling over. How about small caps? Small caps should do well when the U.S. economy is strong. October could not clear the high that we saw back in June and July. Let's see, what else do we have? How about the NASDAQ? Of course, we had technology rolling. And the NASDAQ also put in a higher high, but negative divergence, very similar to the XLK. Finally, let's take a look at the defensive areas of the market. If really things are supposed to be strong, if the market truly is moving higher because of strengthening economy, well, strengthening economy means higher interest rates, and higher interest rates means lower treasury prices. But in October, when we had that final peak, look at treasury prices continuing to move higher. So we had money rotating into defense. XLU, XLU strengthening into the end of the year. How about the XLP? XLP, remember the XLY was going down? XLP is going up. So on a relative basis, you can see this rotation taking place back in 2007. All right, now let's fast forward. Now let's look at these same charts and look at 2018. One second here. Here we go. Okay, so let's first, I'm going to pull up the S&P 500 first. So this is basically a year-to-date chart. So now we got the S&P. Here we are. We're breaking out. Flashback, October 2007, we were breaking out to an all-time high. Now we're breaking out to an all-time high. What do these same charts look like? Well, XLK is breaking out to an all-time high, and PPO, to me, we're fairly close to the center line, starting to point up. I see momentum accelerating here. XLY, remember how poor it was doing back in 2007? Well, we're at an all-time high on the XLY right now. XLI and XLF have been the two weaker areas, and a couple reasons for that. I mean, obviously, the stronger dollar has killed some of the multinationals in this space, but we're getting a breakout. This is a multi-month breakout today on the XLI, and the financials are trying to do the exact same thing, multi-month breakout. So even though we are still lower, I think on a relative basis these last few months, we're beginning to see money rotate back into these areas as well. How about the transports? Transports breaking out to an all-time high. Railroads should do well if the economy's smart, strengthening. Outside of a negative divergence, which could be a short-term problem, breaking out to a new high on the railroads. Truckers, almost, not quite to an all-time high, but certainly strengthening. Need to clear that 880, 882 level. If we can get through that range, things will start looking up for sure there. Russell 2000, remember 2007, we couldn't break out? Well, we are breaking out, and the Russell's certainly benefited from the dollar, which has strengthened in 2018. Let's pull up the NASDAQ. NASDAQ breaking out, looking solid. And then we take a look at some of those defensive areas. TLT, it's been going sideways, certainly is not exploding higher, failing so far at resistance. We want to see the TLT go down. And then we've got XLU, which has actually performed pretty well on an absolute basis. I probably should pull this up. The XLU versus the S&P 500, even though the XLU has been going up, we're not getting a relative breakout. In fact, we're down closer to a 2-month relative low on the XLU. So you want to be careful reading too much into a breakout. A bull market tends to lead all areas higher. But on a relative basis, we should see more money rotating into aggressive areas. And then we look at the XLP, and the XLP also trending higher, but still quite a bit lower, not breaking to an all-time high. And as I've mentioned many times before, the XLY versus the XLP, and I'm going to pull up the, I don't want a candlestick chart. Let's do a line chart. And here you can see a huge rally into June, sideways consolidation, but you can see the strength beginning again here. And we really need to keep this in context, because we could go back. Let me go back to like the beginning of this bull market and pull this chart up. And what you'll see is after a few years of consolidation, the XLY, XLP has exploded to the upside. So we've got to give it a little bit of leeway. It's not going to go up every single day. It's been consolidating the last couple of months. I think that's bullish for the market. So when I look at 2007, where we were when the S&P 500 was making an all-time high, 5 years into a bull market, CNBC cheerleading, blah, blah, blah. There were a lot of warning signs underneath that market to the upside. Not everything was moving up to new all-time highs. But I think when you look where we are today, at least in my opinion, things are completely different with what's going on underneath the surface of the market. And that's what I think is worth keeping in mind. A couple of news stories today just to bring you up to date. Tesla, CEO Elon Musk announced that he is abandoning his plan to take the automaker private. And of course, the market, SEC started to get involved after I think Elon Musk was playing some games with a couple of shorts. But anyway, we won't get into that whole discussion, but you can see that Tesla, after breaking back below the moving average, so far is struggling to get back up above it. I'd be careful until we get back above. Netflix mentioned positively in Barron's this weekend. You can see we climbed back above the 20-day last week. I think Netflix, this is just some consolidation that this company needed, the stock needed for a while. We had a negative divergence, higher prices, lower PPO, went below the 20-day. I wouldn't be surprised to see more consolidation, but I think Netflix is a solid company, likely to head higher. Final chart I'll show you here is Goldman Sachs. Goldman Sachs, you can see breaking back out on a weekly basis, trying to break to a 4-month high. And if we bring up that daily chart, I think you'll see that the strength here is pretty clear. This is the highest level now that we have traded on a daily basis since those highs we made back in mid-May. But we do have a few upgrades and downgrades. So Erin, want to go through those charts?
Absolutely. Let's see what we got going here. All right, so I have 2 downgrades and 3 upgrades to look at. So let's go ahead and get started with the downgrades. First is American Eagle Outfitters. Here we go. And I've gone ahead and annotated these charts. I felt that all of the downgrades, and in this case with American Eagle, it's been moved from an outperform to a neutral. And you can see the PMO, of course, is turned over. Right now, you can see with the OBV, it's breaking down below rising bottoms, the rising bottoms trend line. I think there's an opportunity, of course, for it to hold up here at 2650. But I don't like the fact we're getting these turns in momentum. So I would probably be looking elsewhere, especially off of a downgrade. See, Chipotle Mexican Grill also downgraded today from a neutral to an underperform. And interestingly, it has pulled back. And you can see in the thumbnail here, there's where the gap support is, right about 495. And it's hit that. And it does seem to be holding it. But, you know, again, you're seeing PMO where the momentum is starting to shift lower, obviously with, you know, this rising trend being broken today. Makes sense that we would see the PMO top like this. You know, if you really wanted to try and get in here and scoop up something, I suppose you could if it holds up on that particular area of support. But I'm not a fan. All right, AK Steel got an upgrade today from Morgan Stanley from equal weight to overweight. And I think the upgrades look pretty interesting today. Let's go ahead and make this bigger. All right. I like it there. Okay. So you can see that the PMO is turning up. It's trying to get in there for a buy signal. We've got a bounce off of some important support. Looks like we went down and actually had that fake out maybe this spring, as Mr. Wyckoff, Bruce Frazier, talks about, coming in just below this previous low on a lot of distribution. So we could be looking at a new upswing at this point. With the upgrade, but we haven't quite gotten that buy signal. And Scooter is still sort of trailing off a bit, as is OBV. So I think there are probably better candidates out there. All right, Portola Pharmaceuticals today given an upgrade, and this one went from an underperform to a neutral. So not anything overly exciting as far as this upgrade. We've now hit some pretty serious overhead resistance. I'm not so certain we're going to get through it. There's a good chance we will, based on just looking at that PMO, that rounded bottom that's coming in here as it, you know, set up a new annual or a new low for the year. And, you know, so it's coming off of that, but it's now hitting some pretty serious overhead resistance. I might put this on a watch list and wait for it to move back up. Here's the gap that you're going to have to look for to be closed at this point. All right. And then one final one is going to be Steel Dynamics. And this was upgraded from equal weight to overweight by Morgan Stanley. I thought this one looked very promising and very interesting, as we say. You've got the PMO buy signal has come in. If you look in the thumbnail, you can almost make a case for a really small flag formation here. We're getting the breakout. I'm seeing a reverse head and shoulders that has executed, in which case I think the next level of overhead resistance to get through is at 48. But if you want to look for the fulfillment of the reverse head and shoulders pattern, chart pattern, that would put us all the way up here at about 50. which also coincides with a couple of tops back in February and in July. All right, that's it for the upgrades and downgrades. I think it's time to go ahead and move into those Monday setups and look at what happened last week. And, you know, Greg was here. You weren't here, Tom. So we always say, you know, if you want to take his pick, you can take his pick. I think you may want to. We both did pretty well.
Yeah, he had a good one. You had a better one, but he had a good one as well. So if I was ever going to step up and take his pick, this would be the week. But I don't do that. I'll let Greg have the credit.
Yeah, there you go. Yeah, so if we go ahead and look at, let me go ahead and look at these on the screen here. All right, so these are my current Monday setups, but let's go ahead and take a peek at the others. So here is Lululemon, and you can see that it worked out pretty well for Greg. I liked the setup when he gave it to us last week. He did get, I don't believe he got in on this particular move to the upside. I think it was kind of in there earlier. I'm not so certain, but then I didn't see those prices. But maybe he did get in there. So this was also, yeah, this was a great pick. And then mine was, oh gosh, see, it's just one of those mornings, Tom. Discovery. Here we go. Also had a nice pop to the upside. It's pulling back since then, but I really like this. I could see this holding on to this into the next Monday setup, but I'm not. I'm gonna go out there and look at some new ones. But I think this one's still set up nicely. It's sitting right on this support level, and it's holding that gap up, you know, that gap support back here as well. So I think Discovery still looks pretty good. The only downside, like I said, is you're seeing a little deceleration on the PMO, but again, that makes complete sense when you see a pullback like this after that nice little breakout. So I think this is one of those times we got the breakout and we always say, oh, let's look for the pullback. I think that's what we're getting here. So I think that one looks pretty good, even from last week. But let's go ahead and look at some new ones. And I have not picked it, so as I go through them, maybe I'll be able to come up with the one I like the best. So we'll take a peek here. All right, so I'm going to annotate some of these real time. I picked this one because I liked the breakout from this declining tops trend line, and it's setting up. Let's see, where is our support resistance right now? You know, it's just coming up on it, but if you want to take it down to this previous area of support and new resistance, you can see where we did get the breakout here. That support level, I think, would be a great one for your stop. I think that's a nice setup. And look at the PMO. Everything here, I think, is lining up nicely for Smith AO Corp. Let's look at the next one, BlackBerry. I remember this one really had my interest peaked. Here we go. Nice breakout today. That was really what impressed me is, you know, we've been holding this level right now for overhead resistance, and you can see we're finally getting that breakout. And, you know, it's coming on a PMO buy signal in oversold territory. The PMO is just about ready to hit positive territory. I think there's some great upside potential here. If you go ahead to the auto support resistance, and there you go. So I think you could easily look for an 1150 move, which I think would be very, well, obviously that would work out pretty well in our favor should we get that move. As far as setting that stop on this one, I might go back to, you know, Dr. Elder and look at a 1.5 ATR for it. But I don't want to take up too much of our time here. So let's see. Average 2 range. And I know we were looking at a 1.5. I don't know if this is the right one to set up, though. Let's see. Yeah, this isn't what I'm looking for. All right. In any case, I think your stop could be right down just below this area of what was overhead resistance, maybe at a $10.40, $10.35, somewhere in there, with an upside potential at about 11.50. So I I'm liking this one. I might end up going with BlackBerry here. All right, the Columbia ETF. This one has a rather low volume, but I liked this setup because I've got that buy signal. I could see the scooters getting ready to change direction. Nice gap up. Looks like we're getting the fake out on that negative 5,200-day crossover. So it's not my favorite of the Monday setups, but I still think there's some potential here. You could look for an upside move up to that 1080 mark and set your stop at the below the gap a little bit, maybe at 1020, where we can see support right here. So that sets up a pretty decent risk reward. SEIC Investments, SEI, and nice rounded bottom on this one. And again, you can see where we had some previous overhead resistance / support over here, and we've got the move above that. PMO buy signal has already come in. It's getting ready to hit positive territory. Because this one I look at as a little bit more of a bottom fishing expedition on this one with the EMA set up so negatively, I'd be a little bit cautious here. It's not going to be my choice for Monday setup. Sun Hydraulics, and here we go. I want to annotate this one very quickly, and here we go. It's right there. I was seeing some support, prior resistance as we came back down here. We've gotten back above it. I've got a PMO buy signal. And look at you have almost, I would say an almost rising bottoms and declining bottoms on the price. So it is a little bit, but I'm looking at the difference in how steep this particular divergence is. So I think that there is, I looked at this, and when I eyeballed it, it looked pretty good as a possible positive divergence. Drawing the lines, I think you could still make a case for that. I'd be looking for upside potential here around $53. All right, so I got to pick one. Yeah, I think I'm going to go with, I do think I'll go with BlackBerry BB. And at this point, we have last at $10.72. And my upside target is around $11.50. And my stop here, like I said, I think I'd set it at about 10 and a quarter, maybe $10.30 on a real short-term investment here.
Okay. Let's see. I got a few that I want to go over. And I was going to start from the member dashboard here just to show you how you could get to some of the setups. Because not only do I put my Monday setup in my blog article, but also if you go into the blog articles and go to my blog, at the top you will see Tom's live chart list. If you click on there, for a while I kind of let that go. I apologize, but just wasn't updating it for a little while, but I have updated the last couple of weeks, and I'll try to continue to do so. But here you can see the setups. There were actually, I think I had 6 of them for today, and you can see the first one, NUS. This is the one I'm going to go with, and currently New Skin Enterprises is trading at $79.98, so I'll go with that price. Big thing that I look for is when I get these big breakouts. This was earnings related. You can see the huge volume. It gapped up from 76, opened near 80. I think it was like 79.5, and then traded up as high as almost 89 that day before coming back down, settling down, closing around 84 and change. But it's worked its way all the way back down. The RSI had gone overbought after earnings, was up in the 75 range, but because of this sideways action and pullback back into this gap support zone, we've seen the RSI dip back down closer to 50, which I think is a good thing. It is up a little bit today, and I believe that 79.40 or so was this key breakout or gap, opening gap that we saw back earlier in August. So I think the 78, I'm going to say 78 and a quarter up to about 79.5 is really a key short-term zone. If we break below that, I think you've got great gap support down around 76. I don't own this one currently, but if it falls back into that 78 to 79 area, there's a good chance I could pick up some of this. I'd be looking for a target up closer to 86, maybe even 88, near that intraday high. And if I use that based on where the current price is, I think if it closed or even moved much below 78 and a quarter, I would probably exit based on that short-term strategy. Now, another strategy could be to simply look for a couple of different entry points, with this support zone being the first and then $76 being the second, and then have a closing stop, maybe 75, 75-ish, something like that, with a target up at 88. So you just want to set your entries so that it makes sense from a reward to risk. I like to make sure I have at least 3 to 1 in terms of, or excuse me, at least 2 to 1, 3 to 1, 4 to 1, even better. Sometimes if I'm really patient, get it at the right price, I might even get 7, 10 to 1, something like that. But that's the first one. I'm going to go ahead and go with NUS as my pick for this week. Here are a few others that I thought I'd mention. TPR, today it's down just a little bit below this key support level. I think I put this arrow in here because I wouldn't be surprised maybe if we test this 20-day moving average. But if we hit that, this is another one that I'm watching very closely. I love that volume coming in, about 13.5, 14 million shares. Stock was at 47.5 and traded up over 54 with its earnings report. I think off the 20-day, I could keep a fairly tight stop and look for a 54.5 target. NTR, Nutrien, making a big move today. It was down into this gap support zone, and after gapping up, you can see the initial pullback, that low went right down to gap support. It's been holding, and now today the stock on increasing volume, making a really nice move to the upside. NTR looks good. Sierra Wireless, this one, it's been going sideways. I know there's downside action, but that volume was huge. And this is a stock that tends to be somewhat volatile, can really move pretty fast in both directions when it gets going if you've followed it long term. But I would be using 20 as the upside and 18 to the downside. I like the stock. I just don't like the reward to risk, especially after it's already up a little more than 1% today. GNRC, this is Generac Holdings. We gapped up, very heavy volume early August with its earnings report. Notice it's established these lows down 53, 54 as being key support. Friday, we came down, tested 54, and now we're trying to bounce back off of it. But I see a pretty significant breakout after several months of consolidation and the heavy volume confirming that breakout. I expect to see GNRC move higher. And then the last one that I have for today is Jack in the Box, JACK. This one had been downtrending for a while, and I'm actually looking at this perhaps as a breakaway gap off of a downtrend. So the heavy volume there confirms the gap, the breakout. The fact that we took out these prior highs, I view that as a short-term positive. We've pulled back. The initial move lower after earnings was down just below the 88 area. And you can see right now we are currently at 87, 87, getting very close to support, where resistance is up closer to, on a candle body basis, maybe 92.5. Intraday, though, it looks like maybe 93.5, maybe a bit higher than that. So I think as Jack in the Box, JACK, moves back into this support zone, I think the reward to risk begins to look pretty solid here as well. So those were the stocks that I have. I did, in this particular area, do still have the setups that I had talked about from last week. So you can always go back and take a look at some of those and how they've done. Like I said earlier, I'll try to keep this up to date as we move forward. So let's pull up that summary and go through the stocks that Erin went over. She is going with BlackBerry this week at 1072. I am going with NUS, New Skin, 79.91. And here are the other stocks that we listed. Pretty good picks. I think there's some good opportunities there.
And I did figure out how to add the 1.5 ATRs to the one chart, and BlackBerry's stop should be about 10.25 with an upside at about 1150 plus. So just
okay.
FYI.
All right, there you have it. Okay, well, let's move into earnings spotlight. And really what I just talked about a little bit there in terms of the gap trading and all, I'm going to take a look at some stocks going back probably anywhere from a month to almost 3 months, stocks that have been on my strong earnings chart list. I really just want to go through taking a look at these charts and maybe coming up with, or at least show you how you could possibly trade some of these. Because it's really just experience that I've used to kind of, develop my own trading strategy. It's just, things that work for me. So let me go ahead and start with FedEx. And the first chart, should have it up here. FDX. Now you can see, first of all, the earnings came out over in here somewhere. You can see a heavy volume in selling, and you might say, well, that's horrible. You don't want to see selling. I actually, sometimes if they beat top line and beat bottom line and they're in a trading range and they head back toward a support level, I could still like them if they're in a longer term uptrend, which I believe FedEx, if we go out a few years, right now that's a 1 year chart. But if we take a look at 3 years, you can see, I mean, we've had an uptrend. We've been consolidating for a while. I expect we're eventually going to break out of this to the upside. So just keep in mind that we had a prior uptrend before we got into all of this sideways consolidation. But look at the heavy volume and the push down here to 225 back in the second week of February. That established a pretty solid area of support in my view. So when the earnings came out in third week of June and we saw all of this selling, notice off of the selling though, we did put in, it's not really a hammer, maybe it's not quite a doji, but it did put in a long tail below that prior support level on heavy volume, and it reversed back up. And notice that marked the bottom again. So I think identifying price support and resistance, or gap support and gap resistance, moving averages, all of those things really play a part if you want a short-term trade after these earnings reports come out. So the stock was under heavy selling pressure, very big volume. And look at these candles. These are not very nice candles at all. So I'm not a fan of trying to catch a bottom until I see what could be a bottom. So, and I didn't trade this one, by the way, so I wish I had. But FedEx came down, went below 225, closed above it. And from that point forward, if you had managed to say, okay, this is where I think that FedEx is going to stop the bleeding, you could have put an intraday stop in below 222, held it, and then you see a nice recovery here on FedEx as it makes its way back up. The reason I like to trade these stocks that have beaten top and bottom line estimates is that I believe Wall Street can trust management. And so it gives me a little bit more confidence when I trade these stocks, knowing that they came up with results that were really in excess of what they had promised Wall Street. I think once you come out with results, or once you underperform and have to try to come up with excuses with Wall Street, I think it's like anything else. I mean, if you've worked with people who don't deliver and continue to make excuses, you get to the point where you really don't trust what they tell you they're going to do. And I think it's the same way in the stock market. If companies are missing on their bottom line, even if they're raising guidance, I mean, I don't know if I can trust what they're telling me about raising guidance if they can't beat, if they can't perform and deliver what they said they were going to do in the last quarter. Why should I believe they're going to do it in the next quarter? And so I think there's always this black cloud over companies that don't manage to report solid numbers. And so I like to stick with companies that only beat on top and bottom lines. And if I like their charts, again, it could be in a downtrend, but if I see a key area of support, many times I will still get into it. Now, I explained quite a bit on that particular chart. I'll go through these others much quicker, but I just want to give you a little background if you're new to the show or if you're new to my particular trading strategy. ATU is the next one. And I don't need this long of a chart. Let's go back to a 1 year. Now, these companies all reported, these were probably back in June. Well, you can see the huge move up. But let me annotate this real quick. I mean, the prior high, this is TA 101. Your prior high is right here at 27.5. You break out above heavy volume. Okay, maybe you chase. I don't like to chase. I would rather annotate this. Okay, they beat on top line. They beat on the bottom line. Great volume. They break out. I put it on my chart list. And I wait. And I wait, and I wait. In this case, you can see the RSI at the bottom eventually dipped into the 40s. I love RSIs in the 40 to 50 range. With this, you can see also we came down below the 20-day moving average, but we held the price support. That could have been an area. I did not trade this one either. There's so many stocks on my chart list, I can't trade them all. But this one came down to a key support level, and it held multiple times. So here's your first pullback, and then the buying kicks in. You come back down, put in a lower low intraday, but hold it on a closing basis, make another push to the upside, and yet a week later, you're back down at that same support level before we make a move. Resistance is up near 30, support's near 27.5. Closer I can get this stock to 27.5, the better I like it. Because again, I've got a stock that's outperforming, that's that has shown Wall Street it can exceed its expectations, and I'm getting it close to a price support level. So this is a trading range that I would continue to trade on ATU. Eventually, I think it's going to break out. But normally when I get a stock near resistance, I just take it. I don't wait and see if it's going to go through. I like to be on the sidelines, essentially, when it goes through. And then there may be some opportunities to trade it again down the road. Next up is Micron. This is ticker symbol MU. And all right, so Micron came out with earnings over here, and you can see we had higher high, and normally I'm going to watch that low right here. Just make sure that that's not violated because we have a higher high, higher low, higher high, higher low, higher high. I really don't want to lose this support level. And once again, if I just annotate this going across here, I mean, after earnings came out, Micron went down, struggled, pulled all the way back. But look at the reversal that took place and where it took place, right at a major support level. So on Micron, if you really like the stock and you're looking for entry, well, if you can get it close to a prior price support level like this one, you can put a fairly tight stop in so you don't have much downside risk. And then you get the rebound like this, and you got huge upside. Micron could be on its way to go back all the way back up to 63, 64, especially if the bull market continues into the fourth quarter when many technology stocks perform exceptionally well. Next up, this one I do own, and I actually bought this one when I sold Qualcomm. And I still like Qualcomm, by the way, but that's one that's at resistance. I just want to see it get through. But Winnebago, WGO, the stock was down near support, and actually we have a tail over the 20-day. If we don't break above the 20, I might just take the profit here. But check out, this was the earnings, big gap up, looked to me like a changing character. We were downtrending, we gapped up. I thought it was a breakaway. Obviously, I don't want to lose these lows over here, but notice the selling here on the heavy volume and how we reversed just above 36. We came back down just recently, these last couple of days, down close to that support level. I thought that was a great reward to risk trade. I actually only bought half of my position because I was going to buy another half at 35, but it never got down that low. It started to turn back up. But I don't want to get up here and have these false breakouts above the 20-day. So this is a situation where either I get this breakout, and you can see the volume picking up today. I either get this breakout above the 20 and maybe make a run for 40, 40 and a half, or if I leave a long tail here, I may just take a smaller profit, move back to the sidelines. Next is CarMax, KMX, another one I did not trade. Here's your gap up with earnings, pull all the way back. Now, we did not get to the bottom of gap support, and we did go slightly below the 20-day moving average. But look at that bullish reversing candle. Been downtrending, then you get the reversing candle, and then you start making the move back up. But more importantly, that sets an important low. And 6 weeks later, we ended up going down to 72. And in about 2 weeks, the stock's back up to 77. That's a nice profit in a short period of time. Once again, I didn't own it. Wish I owned it. But KMX has been a great performer. MKC. McCormick. There was something on this chart that I really liked. Well, there's a couple things I like. First of all, here's your earnings. Big move up. Now, notice a couple things here. Number one, there's your prior high. We broke out on heavy volume, but we never went back down to that 110 level. So if that's the only entry area that I was interested in, I'd never bought the stock. And I actually haven't bought this stock. Actually, I owned it a long time ago when it broke its ascending triangle. But anyway, here we got the breakout above this price resistance, pulled back. One of the areas I like to buy is on a rising 20-day test. And you can see right here, McCormick went sideways, consolidated, had the RSI, which was up in the 80s. It fell back into the 50s, never got to the 40s. But it did pull back, hit that 20-day moving average before it goes higher. So the 20-day moving average is another one of those key areas that I like to follow. It could, may hold, may not hold. But if you're trading it off of the 20-day and it closes below, you can keep your stop tight. And to me, that is what using gap support, price support, moving averages, that's what all this is about, so that you can keep your stop fairly tight. Managing losses is probably the most important thing in trading. Let's take a look at Nike. Nike's been a great performer. I think this, by the way, Nike loves the month of September, even though the overall market's bad. Take a look at after gapping up, where did Nike go? And I'm just pulling up all these charts because the more you look at them, the more you start to see things as they're happening. But here you can see Nike pulls back after getting up over 80. Look at that reversing candle, bullish engulfing. It looked like we were breaking down here below support. I would not have bought that day, but after the gap down and the move back up the next day, you could have bought, you could have had a stop in below, say, 75, and you'd still be in the stock, moving it to the upside, probably be up about, I don't know, 7 or 8% at this point. And that's from a month ago. Next up is Helen of Troy. I actually watched this stock for a long time, and I never did see it get back. I think this one got back to support, and I didn't get it. It was a great earnings report. I remember this stock's earnings report. Here was the huge move up. Stock was trading at 102, went to 115 at the open the next day. Look at the volume. Just swamped anything on the rest of this chart. After it got up to almost 120, where'd the pullback go? 110. That establishes your price support. After you bounce back up, you can clearly see 110 is where the buyers came in. When we went back down, where did we go? Slightly below 110, and we reversed right back off of it. 1 week later, maybe 7, 8 trading days later, we were back up at the high. 110 to 118, just like that. It's at 7%, 7.5%. But that one I didn't see on the reversing candle. I wouldn't have seen the reversal on the 20-day because we didn't hold it. The volume wasn't that great, so it wouldn't have come up on my volume scan. And the RSI, well, one day it did go below 50. I'm surprised it didn't come up on one of my scans. But anyway, HELE turned out to be pretty good. Let's take a look, just a couple more here. ABT, look at the gap up with earnings. Where'd we come back down to? Right to the price support, gap support. See these tops coming across here? Gap support just below 63. That was the low. After we went back up, where did we pull back to? 63 again. And now look where we are. 2 weeks later, we're at almost 67. And let's see, BXS. I think I wanted to show you this one as a potential selling, a reason to sell. And let me annotate. We've talked about this plenty of times as well. But from a price resistance standpoint, that's pretty important price resistance. We got up here, we tested, couldn't get through. Got here, tested, couldn't get through. Got close here, couldn't get through. Notice intraday, we went through here last week. Failure to make that breakout, I would have sold at the close that day. I wouldn't have taken a chance. And next 2 days, it was down a couple percent. But from a short-term trading perspective, that's pretty important to save those couple percent, not ride it back down. So I think BXS still looks good, but major resistance here we've got to get through. Let's do one more. NTR. Actually, I'm going to do DHR because that one I actually own. Let's do DHR, which is Danaher. This one's finally starting to pick back up again. But you can see here after the gap up with earnings, initial pullback, held the 20, moved back up, went down even lower, and put in a tail very close to gap support. I think that is an important level of support. I actually bought over 100, so I want to say it was probably on this low right in here. Probably was in around 100.75 or maybe 101. But I had my stop in below gap support. And so DHR is held. You can see today having a pretty nice day. I'm looking for it to go back up and test that 106 level at a minimum. And this actually was another one I only have half position. That's what it was because I bought in at 101. My second entry was going to be down around 98.75, but I never got to my second entry. So I've only got half a position. But had I hit the second entry, that would have gotten my average cost below 100, which would have set up a really nice reward to risk. But still, stock doing pretty well today, moving back higher. So those are the stocks that I have for the earnings spotlight for today. Hopefully that helps. If it doesn't, if that's not your trading style, that's fine. But hopefully you'll understand a little bit more about my trading style and strategy when I go over it during the show. Because it's just from looking at charts over and over and over again. I mean, you look back here on the Danaher chart. Well, can't see it right now with the summary up, but Danaher hit 104 back in January, and then hit that same resistance level in March, in April, and in June. So that's why when stocks get to resistance, I don't hope that they get through. I just take my money because I know that's where sellers have been before. So anyhow, those are the stocks that I just went over. Hopefully you found this whole exercise useful. But anytime I talk about earnings and gaps and price support and reversing candles, that's really, I try to use all of that in trying to develop a trading strategy that minimizes risk and maximizes returns.
Excellent.
Yeah.
You did a fabulous job. I think everybody got something out of that for sure.
All right, 10 and 10.
10 and 10, let's do it. We had a lot of requests today, a lot. So I ended up, I think, with 45 requests. So there's not the best chance yours will be picked, but we'll see how it goes. And remember to go in and like other symbol requests, because the most popular will be our second symbol, whether we've looked at it yesterday or Friday or not. I thought it was interesting. I always like to go through the sectors as far as our requests go. Definitely a move as far as cyclicals, healthcare, and technology. But what I thought was interesting is the addition of quite a few materials sector stocks. And I know part of that would be we did talk about steel a little bit at the beginning with those upgrades. But I thought that was pretty interesting, and energy starting to poke out here, and more than one staples request. We usually only have one, if one. So we ended up with two today. But let's go ahead and get started with our first one, Corning, GLW.
All right, I actually was just annotating it, but let's take a look at it and see. It kind of fits right in with what I was just talking about because Corning came out and beat top line and bottom line estimates, and has reacted very nicely. So let's pull this up, take a look. And here you can see, this is GLW. Here was the big earnings report, gap up. The stock, look at that, is a really nice candle. When I see the heaviest volume on the chart, and I see a Maribozu candle, which is essentially a candle where you open at the low of the day and close at the high. The reason that that's so bullish to me is that when you gap up, market makers are generally on the other side. Everybody wants to buy. A lot of times you don't have sellers. When a company comes out with great news, not too many folks want to sell. Most everybody wants to buy. So you've got market makers that come in, provide the liquidity by taking a short position. And that's why a lot of times you get these stocks that will pull back and hit the gap support area. But in this case, after gapping up on heavy volume, it kept going higher. And the open was essentially the low of the day, which tells me market makers could not get control, that there was too much demand. And so these are the types of stocks that I really like from a longer term perspective. Now, I highlighted the pullback because there's your 20-day test. We didn't get down to the top of gap support, but we did put in a very significant low now on the 20-day moving average, and we're making a push back up toward the upside. I think at 34, I would be taking profits until I could see a breakout above that high back on July 30th. And then I would wait, and if it pulled back down closer to the 32.5, maybe even closer to 32, that's where I would look to get back in. So I like the stock. I think it goes higher, but I just respect that resistance that's in play right now. That's where you can see some pretty heavy volume where it reversed. So I would expect to see some sellers pretty soon on GLW.
Okay. The next one is the most popular in the chat room, and that would be Intel, INTC.
Yeah, semis are having a good day. Intel's bouncing, but this chart doesn't look anything like AMD. AMD is just flying to the upside. So Intel is starting to strengthen at a key area of support. That's good news. But on a relative basis, this is not one of the better stocks out there. I mean, you could see from a closing perspective, candle bodies, this is the low. And then using the tails, which is intraday lows, you can see that this support comes in between about 46, 46 and a half. We're bouncing, but notice that the 20-day moving average has created some problems and an obstacle for Intel over the past few months. So let's see if we can get through. Intel has definitely strengthened off of support, which is good news, but it is an underperformer relative to some other stocks, particularly AMD. And so as a result, I would be a seller at the 20-day. I'd be looking for something else.
All right. Here's one we haven't looked at in quite some time. How about General Electric?
The General.
Yes.
All right, let's take a look at the general. Well, we're getting a 20-day test with the PPO pointing lower on the most recent low. Nice little hammer there. So I'm not surprised by the bounce. I'm going to be really surprised if we go much higher, though, because check out where prior support was. Prior support was right about there, coming across multiple times. We held support at 1275 or 1270. We went below it. Volume was pretty heavy as we went through it. We put in the reversing candle. We've come back up now, and we've tested this 1270, 1275 area a couple of times, and there's the 20-day moving average. This has been downtrending for a long time, and I mean, I can't even remember when you and I started talking about this, Erin, but I think it was back when it was in the 20s.
Yeah.
How weak it is and how, on a relative basis. And, all the way we've been saying, well, maybe this is the bottom. Well, maybe this is the bottom. Well, maybe this is the bottom. And this is why I don't try to call bottoms, because so far we haven't found the bottom. Maybe that is it at $12, but I'm not convinced. I'd be a seller at the 20-day. I'd get out of it.
All right. Let's see. The next one would be the Junior Gold Miners, JNUG, JNUG.
Yeah, this is the 3 times bull Junior Gold Miners. I mean, first of all, gold miners have been underperforming the S&P 500 for about 7 years. So if you want to lose your money 3 times faster, you can get into JUNG. I'm not a fan. Now, Greg was on here last week, and he's short term, and I think would admit that it's short term. He likes what's going on here. The group is doing well. You got to time it perfectly. I mean, look at this chart. You've got a couple weeks here, maybe a week and a half here, a week here, but for the most part, this is an ETF, a triple ETF, leveraged ETF that has gone lower and lower and lower. So maybe this is something that's really going to start something big to the upside. We were very, very oversold. RSI down in single digits almost, down close to 10. So yes, we were certainly due for a rebound. I still think that gold miners, they're underperforming the S&P 500. They have been for a long time. And so I'm not a huge fan. I would just simply say there's some gap resistance and that 20-day moving average between 9 and 9.5. I'd be looking for a reversal somewhere in there. So I'd be pretty quick on the trigger to capture profits if you're in this one and you got profits.
All right. We had 2 requests for 2 different cybersecurity funds. I figured I'd pick HACK, HACK.
Okay, I like the breakout here. I saw, I think it may have been Arthur that reported, did a blog article. I saw his headline, didn't get a chance to read his article, but he talked about software stocks and cybersecurity stocks leading the market on Friday. And I had written about, software stocks being so strong, but you can clearly see what Arthur was also referring to. Big breakout on Friday after sideways consolidating. I mean, this is pretty big because you got an uptrend followed by equal highs and equal lows. This is a really nice basing period here on this ETF. Big breakout on Friday. Today's volume is pretty strong, and I don't follow volume too much on ETFs other than just to see whether or not there's interest in an area. I think the interest is building here in hack and in cybersecurity stocks. Best entry point for me would be down around 39.40, which is this double top breakout. That was resistance, now becomes support.
Okay. See, the next one is also an ETF, the Italy ETF, EWI.
All right, well, all of these foreign ETFs are getting a lift recently because of the rising dollar, the falling dollar. But overall, I still think the dollar goes higher. And so that would probably keep me away from these. I think what we're seeing here is very similar to what we just looked at on GE, to be honest. And that is we had a breakdown below support right here. And we've since recovered. Oversold bounce. We were down under 30 on the RSI. Bounced up. We've tested the 20-day moving average and price resistance. I think there are better opportunities at this point because we now are testing overhead resistance. So I don't like it at this level.
All right. Let's see. The next one we will do is BJ. Of course, that is BJ's wholesale holdings.
All right. Well, bearish engulfing candle. So I'd be looking for support 2 areas. I think the space is pretty good. So I actually like the stock. But there was the breakout right at about 27, which was the low today. We could go slightly below that with a really strong PPO. What I would be watching is this rising 20-day moving average. So I'm okay with building a position on BJ's between 27 and the 20-day moving average, which currently is at 26.19.
All right. One of those consumer staples requests, Archer Daniels, ADM.
Yeah, I recently looked at ADM and now I don't know why. Maybe it'll come back to me. Well, two things. Number one, the bearish thing is a negative divergence, but I'd be willing to overlook it, and I'll tell you why. First, you've got the lower PPO right there with the higher price action. So that is a negative divergence. However, that is telling you that price momentum is slowing. When you look at the latest breakout, which was right here, pulled back a little bit, and then we made this breakout, check out the increase in volume down here. So you can argue that it's got slowing momentum because we've got a lower PPO with higher price. And that is true, slowing price momentum, but that does not take into account volume. I see accumulation taking place here on ADM. I think eventually it goes higher. Now, the volume has definitely begun to dissipate here. So if we close above 51 and you see the volume's not moving up at that point, then I think we could get another pullback to test the rising 50-day moving average. And that would likely be right here. So just anticipate this may be going higher. If the volume doesn't pick up, I think we can come back, test this low at about the same time the 50 days coming up from underneath. So I'm a fan of ADM. I wouldn't buy it here because we are at recent resistance. We are overbought with an RSI near 70. But this is one that if we got that pullback near $49, I'd be much more interested in it.
All right. Number 9 is Anadarko Petroleum, APC.
All right. Yeah, I'm not really a big fan here. Look at the volume. It's been very heavy, and we've been staying below that 20-day moving average. That would be the biggest problem for me. And until we get a breakout above the 20-day moving average, here was the drop below. I mean, here was strength, but we never even got to the 20-day. Here we're trying to strengthen, but once again, not yet to the 20-day. I would have to at least get through the 20-day before I would begin to consider. We do have the PPO starting to turn up. So if we get one more low below 62 and the volume is lighter on that selling, that could coincide with a potential bottom. But right now, we're too close to that 20-day. I expect APC is going to roll over one more time. So I would avoid it.
All right. And the final one is going to be Kemet, KEM.
All right. I see an uptrend and what could be an inverse head and shoulder pattern. So let me just annotate what I'm seeing here. It's still early. But anytime I see an uptrend like that, I start looking for continuation patterns. And what we could have is that first reaction high. Here was the selling, and here was that reaction high. Look at that bearish engulfing candle right there. That, to me, established a short-term level of resistance. And we went down to a lower low, actually testing this prior low, and that could be the head. Now we've made our way all the way back up. What I would have expected, if this was bearish, I would have expected to fail at $25. That was support. We bounced. We went through it. We came back up. We hit the 20-day moving average and this price resistance right at 25, and we kept going. That's a bullish sign to me. We now have tested the reaction high in the second week of August. I think $27 is big resistance. I wouldn't be surprised to see a pullback and test that rising 20-day moving average. I'd be a buyer on that pullback. I think KEM looks pretty good, actually.
All right. And that is 10 stocks in just about 10 minutes. Thank you for all your hard work on that 10 and 10. I will have all of those charts up in the Market Watchers Live chart list, and you can go there just by going to the blogs tab, click on the Market Watchers Live blog, and the link is at the very top, as well as in every one of the recaps for Market Watchers. All right, it is time for our final market update. Let's see what the markets have been doing. All right. Well, as you can see, when I look at our candle glance charts currently, markets are traveling higher. It looks like we're taking a little bit of a pause right now in the action, with the Dow up right now 264.66 points. We can see the S&P is currently reading right around 2897.15. NASDAQ also made the big move up, but you can see it's actually been consolidating now since earlier this morning. The S&P 100 also following suit, higher on the day. At this point, very close to intraday highs. S&P 400 pulled back a little bit along with the Russell 2000, pulling back off of the highs of the day. You can see TSX is taking a little bit of a break, but is sitting at its highs for the day. Treasury yields are higher, reading 2.851%. UUP is lower right now on the day. UUP reading just above $25, 25.08. GLD is on the rise, but I would have expected to see a little bit more of a stronger move to the upside, given the decline and deterioration in the dollar today. But it is higher. Currently, GLD reading at 114.56. USO up slightly, 14.48. And finally, the VIX. It was on the rise. It is still ahead today. Currently reading right around 12.16. So not particularly nervous out there. Those investors aren't looking too nervous. So I think that'll be interesting. I will be showing you the chart of the VIX shortly in the DecisionPoint report today. All right, so with that, let's go ahead and get started on that DecisionPoint report. Get over to my handy dandy charts here. All right. So here's what I have, what I'm going to go through. I usually will look at all four of the major indexes for our scoreboard, and you can find the DecisionPoint scoreboards just from using your member dash. And it's one of the selections right here, and you'll want to put your DP signals. And one of the things I wanted to point out, and I will be showing the chart, the signal table of all of the indexes and scoreboards. But what you'll notice is that we did end up getting on Friday a PMO buy signal on the daily chart for the S&P 500. But more of interest was the Dow. It finally lost that sell signal it had held, I think, since March on the weekly chart. The weekly PMO finally had an upside crossover to give us a fully green buy signal board for the Dow. So if you look at all of these, you notice, like I said, Dow is all green. Excuse me. S&P 500 is completely green. Let's look at the NASDAQ. We're still waiting for that PMO buy signal to come in on the daily chart. We'll go take a look at that shortly. And S&P 100 also still waiting for the PMO to have an upside crossover on the daily chart. Once we get those two upside crossovers for the NASDAQ and the S&P 100, we are going to move into all green for the DecisionPoint scoreboards. And we did see this. I'll have to go back in time and see exactly when it was, but it wasn't maybe 3 months ago. 2-3 months ago, we did have all of them go green, but it lasted, I think, less than a week, because one of them ended up losing. I think the Dow ended up losing its, like I said, that intermediate term trend model. I'm sorry, the intermediate PMO buy signal, I think, disappeared, and that's what kept everybody from being completely green. Let's go ahead and look at some of these charts. The Dow weekly chart, this is where we had there we go. This is where we got that buy signal. These signals, I already had seen that it was coming up earlier in the week, but these signals that come up on our weekly chart do not go final until the final trading day of the week is concluded. So close of business on Friday, this signal stuck around, and it looks like so far, of course, we're riding higher. At this point, I would be looking for a move to all-time highs, especially when I take a peek at this weekly chart. I like the buy signal, of course, but we also have what I was looking at as a possible ascending triangle. I think that was sort of loose as far as what I saw in that chart pattern. But at this point, we are in a nice, strong rising trend, rallying in a good way here on the weekly chart. So I would expect to see these all-time highs challenged. Maybe not this week, but in the intermediate term, I think the indicators and the price charts look pretty good. All right, S&P 500 came in with its new PMO buy signal, and you can see with today's gap higher and of course move to all-time highs currently. Things are looking very strong at this point with that move and that breakout above the all-time highs. I don't see anything on this chart to get me too concerned or worried about the veracity of this particular move and the likelihood that it will continue. Possibly might see a bit of a pause and a pullback to this breakout area. Let's go ahead and look at the short-term indicators first so that I can bolster my case here. So we got the big gap, right? And we're in all-time high territory. However, if you notice with the short-term indicators, they did top out and they are starting to move lower. Now, I think it's good news that they might be able to decompress here off of 2 rally days. That does show that their price strength is there. And, with oscillators, as we say, oscillators must oscillate. And so you're going to see it having to turn back down. I still think that this would should give us a little bit of pause in that we do need to see with this big breakout, I think, to all-time highs. I would be looking for a little bit of a pullback or at least a pause for digestion of the 2 moves from Friday and today. And I think that these short-term indicators are really supporting the fact that we will likely see a bit of a pullback in the very short term. But as I said, my intermediate term indicators are looking pretty good. We have a breakout here from a declining tops trend line on these. We're still holding on to the buy signal that, the upside crossovers that came in on the ITBM and the ITVM. We're getting the same sort of movement here on these 2. I think the only thing that had me a little bit concerned was back here when we saw this high and this high. We have them rising, but over here when we topped, it was lower. And generally when you see the volume indicator topping out differently than the breadth indicator, that's usually spells disaster. And that's what I was noting over here. But we never actually got the top on the ITBM. It still is continuing higher. It's now higher than its previous top, so I think we're safe there. So intermediate term, I think still looks pretty healthy for the S&P 500. All right, I want to look at the VIX. We're going to jump around just a little bit today. On Friday, when I looked at this chart, my thought was we had these climactic readings. Notice that we were looking at, as far as advance minus declines and volume advances declines, advancing and declining volume. We were on this trend moving lower and lower. Price was pausing, and then we got the upside move, that rally on Friday, and boy, did we get some good participation in that move. And that to me spells out buying initiation. That tells me to expect some follow through on the rally. And sure enough, we did get our follow through today. I don't think the VIX is very helpful still. It's sitting there in the middle of the Bollinger Bands. I only find the VIX intriguing and useful when it starts to puncture the lower or the upper bands, because I do use it as a sentiment indicator. So if you get stretched out, if the numbers get very, very low on the VIX, that implies complacency, not worried. Investors aren't worried. And if you get too complacent and too bullish with the VIX, that's when you would start sentiment being contrarian. That's when you look for the downside reversal. So that to me, when we get very, very low VIX readings, that is an overbought condition in the ultra short term. And I would look for those downside reversals. And of course, the opposite is true when the VIX gets very high. People get very nervous. Again, it's a sentiment indicator to me in the very short term. So if people are very nervous and everybody is getting bearish, that's when you look for those upside reversals. But we're not seeing that. We're just seeing this, sideways movement going on here, right in the middle of the Bollinger Band, just sitting on its average. So I don't think we're really seeing much to read into the VIX. It would have been especially nice had we seen a puncture of the lower band in addition to these buying initiation, these climactic readings in breadth. That would have been, great. We didn't get that. We still ended up seeing that follow through on Friday's rally. All right, let's go ahead and I want to go back and look at the NASDAQ. We already looked at the S&P 500 and the Dow. So let's take a peek at the NASDAQ, and I'm going to update these annotations just a bit while we're discussing them. So we've got that gap up today, and it's sitting right on top of overhead resistance from those previous all-time highs. I had been feeling a little shaky about the possibility of a double top forming here, but as I said when I wrote about it, and I know when I talk about it, it's early. We hadn't really actually formed the pattern. It wasn't going to form until we had to come all the way back down here to that low back in July before it would even be considered a pattern, a double top pattern. So I'm going to go ahead and take these out because I don't think that those are valid anymore. And I'll stretch these out just a bit more for us so we can get a better picture as to where our support and resistance is. So I'm seeing the gap up. I'm looking at it as a breakaway. I think that we're going to see more upside movement here. And you can see there's your PMO that is rising and almost has set up its buy signal. Because remember, on the NASDAQ 100 and on the OEX, we were still waiting for those green arrows to switch over for PMO buy signals on daily charts. Well, we're just about there for the NASDAQ. And let's go take a peek at the OEX. How close is it to getting its PMO buy signal? It's going to get it today, more than likely. I don't see it falling low enough to pull that PMO back down today. It's, again, gap move, breakaway gap likely, sitting now atop the previous all-time highs for the S&P 100. I'll be updating this to show the PMO buy signal in place. And look at the OBV. We're really seeing the kind of volume we want to see when you're looking at a nice intermediate term uptrend. This is what you want to see, and that's what we're getting. I can't get bearish at this point. And I know, Tom, you're going to talk about seasonality tomorrow, and I know September can be a weak month. But right now, indicators and the charts themselves, momentum, looking quite positive, I would say. S&P 400 also seeing a nice breakaway gap and move to the upside. Look at the setup, though, here. I'm going to go back over here to the thumbnail. I see a flag formation here. And this is the breakout from that flag with a breakaway gap. I mean, this is textbook. It looks great. And the upside, the minimum upside target you would look for is the length of that flagpole added to the top end of the breakout point for the flag. And, that would be a nice size move, hefty upside move. PMO is supporting that. The OBV isn't quite as healthy as we saw back here on the S&P 100, but I think that it is still healthy enough at this point. But there is a little bit of concern when you look at these OBV tops in the thumbnail and see declining tops, yet seeing very steep rising tops on price. So that would be considered a negative divergence. But to me, that got canceled out as soon as we got the breakaway gap and the move to the upside. Let's take a peek at the Russell 2000 right now. And again, also enjoying quite a follow-on rally to Friday's rally. PMO looking great with the buy signal still heading higher. Strong scooter. A little bit of a flat OBV, but you can see since mid-August, as we started at the low here, moving to the high side, we are seeing the kind of follow through, the kind of confirmation we want to see on the OBV. I'm going to take a peek at the weekly chart right here for the Russell 2000 as well. And I look at this, and you could make a case here for a symmetrical triangle, which would imply higher prices as well. I think I saw somebody discuss it as a flag formation. I'm not really, because of that low, I'm not really on board that it's a flag. But again, we're seeing really positive charts. Look at the PMO. We got a bull kiss, came down as a fake out, try and get suck in as many bears as possible. And now it is bounced and it is headed higher with the move to the upside to all-time highs on the Russell 2000. All right, let's take a quick peek at the big four. Actually, I'm going to cover the dollar and gold last. Let's go into oil. I wrote quite an article, long article on last Thursday on oil. I was of the opinion we were going to see a nice breakout. We'd already seen the break from the falling wedge, which is a bullish pattern. And it's always nice when you write an article like that and the very next day you get a gap up to the upside. Made me very happy. We're still seeing a lot of upside potential and upside movement here. Notice that, like I said, we've got the buy signal. Look at the OBV breaking out above that declining tops trend line. And you can see that the scooter is now reading almost at 93. The caveat, of course, is 1475. It is sitting here a little somewhat ominously. When you see these areas that it tried to get up there. So it was formed here as resistance, failure, didn't even come back up to test it. So this could be a difficult place for oil, for USO, but gosh, when you look at a PMO buy signal that's this strong and it's clean, and you can tell that a lot of times when you get these clean signals, they do activate, they do follow through with what you would expect. So I like oil still. I will look here at the weekly chart as well, and you can see that the rising bottoms trend line that is holding, and you could draw in that declining tops trend line. I haven't there, but we've got the breakout above that, which is forming that that falling wedge that's on the daily chart. So I think oil still looks good. Yes, we do have that PMO sell signal. It is in overbought territory on the weekly chart. So, yes, I'm not thrilled with it, but I think that it's played out. We had declining tops here. We had rising tops here, and we got the fulfillment, I would say, of that negative divergence with the decline down here to $13. And I think we're making our way back up with that breakout. I think oil still looks really good. TLT, and then we'll look at gold and the dollar very quickly. All right, so we're on the PMO buy signal. I don't see anything interesting here with bonds. It's just, hovering here on this support resistance level. I don't see a whole lot of potential here. The PMO is starting to decline. The volume is going the right direction, but the scooter is not. I just feel like we're kind of at a crossroads here for bonds, and I don't really, given what I'm seeing here on the chart, I really don't see a way to lean one way or the other. All right, so let's go ahead and look at the dollar and gold, and then we'll close it out. And I know we had our poll that we want to talk about on the dollar. All right, PMO sell signal going for the dollar. I have been of the opinion, and I know, Tom, you and I have talked about it, I really think that the dollar is going to bounce, but I can't sit here as a technician and argue with a big PMO sell signal, OBV that's in decline, scooter that's in decline. I mean, there's just nothing here except for the, those gut feelings about what'll happen with the dollar. So I have to remain bearish right now on the dollar and look for a pullback all the way down here to that 24.80 level before we get that upside move. I think we still have some more to work out with the dollar. Gold is going to definitely benefit from this, and it already is. The setup is pretty great. I know that Greg was talking about it, and I was a little hesitant because, again, dollar, I just feel like it's going to rebound. But again, I have technically looking at the charts, which is what I do, dollar should pull back further and gold should break out further. I'm looking for a move to about 1240 for gold right now. And I know it is also up on the day. This doesn't update until the end of the day. But PMO buy signal, everything looking good here. So I am bullish on gold. So let's go ahead and we'll take a peek at our summary slides that I have for you here. First one is, of course, the scoreboard. And with the scoreboard, I pointed out the two new buy signals. We're still waiting on those two PMO buy signals, but based on our look of the chart, we should see that coming in today. So you'll see that written up on the blog on Monday. All right, and then if we continue through, when I looked at when we looked at the indicators, looked pretty good. There we go. So climactic ones, we're very bullish for the very short term. I'm thinking we still might need a pause to digest this move in the short term, but intermediate term, everything is looking healthy. I would expect a continuation of the current rally. And then when you look at the big four, we have dollar, this doesn't look like the right one. Yeah, it's pulling back to rising bottom support, but that sell signal makes me bearish. PMO buy signal and the breakout on gold, I'm looking for it to move higher. Oil, I think, still has a move left in it to continue higher. And bonds, it's not, I don't see much on that chart at all. It's just holding that support level at 120, 150. All right, that was the DecisionPoint report. Let's go ahead and pull up that poll that we have everybody talking about.
Yeah, I'm gonna have to take the other side of the dollar and gold. I think the price support holds, trend line holds. I expect it to bounce.
Mm-hmm. So you're still feeling that that bullish gut feeling on the dollar. For me, like I said, gut feeling, we are going to see a turn. That's what I suspect. But technically, I have nothing to support that. So I will go in bearish with the dollar. And it looks like everybody's pretty much in the bull camp, though. So, sentiment being contrarian, maybe those technicals are going to hold up on my charts. We'll see.
Yeah, I wouldn't say it's a gut feeling for me. I've got 10-year Treasury yield, which in the U.S. has been rising pretty consistently against the German Treasury yield, and that generally drives the dollar higher. So we had a huge run. From back in April, we were below 90 on the index, got to 96. So I think the pullback was fine, but I don't think it'll last. I think we go higher.
All right. Well, like I said, I think we still have to move back a little bit further, but at this point, my goodness, it looks too good. Everything is looking too good for gold on the charts technically, and not looking good for the dollar. So I have to hold those positions.
All right. I want to thank everybody for being with us today. Please remember to complete the survey as you exit. Love to get your feedback, hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. Hopefully see you back here on Tuesday. Happy trading.